that we have today. It's on GST updates with practical case studies, practical scenarios. Just to briefly introduce the speaker, CA Praveen Kumar is a science graduate from Kakatiya University. He has completed his MBA from Cochin University in Science and Technology. He's also completed CWA, as well as he's presently the practicing chartered accountant in the area of indirect taxes. He's a faculty at ICI for GST training sessions and certificate courses. He conducts workshops and training sessions to larger corporates in the areas of indirect taxation and documentary management with due focus on proper internal controls. He's also a regular faculty at CMA branch chapter since the year 2010. With this brief introduction, I welcome CA Praveen Kumar to this session, and over to you, sir.
Happy Republic to everyone. I would like to thank Bangalore Chairman, the Management Committee members at large for giving this opportunity for today's session. Today we have the discussion on recent updates on GST. 31st December is a remarkable day for us. Usually we see budget is one period where a plethora of notifications will be coming. Earlier when we had this inflexes, we used to wait for the budget day, because the day of budget announcement, a couple of changes in the rates are going to take place, which gets affected from the midnight of that particular day. Similarly, if you see 31st December 2018, this is one remarkable day where around 30 notifications, 10 plus odd circulars and 3 orders, removal of difficulties, were released by the department. It is easy for us to comment. This circular is contradictory. This particular notification doesn't know where it starts and where it ends. But if you see the kind of efforts these people have put in for bringing out these notifications, it's marvelous, it's excellent. As a human being, if you have to sit and draft a simple English, it becomes a little easier when we read for ourselves. The same English, if it is presented to the others, takes some time for it to understand what is going to happen. As well as the CA writes a love letter for proposal. Where does he start, where does he end, subject to ifs and buts, comma, full stop, semicolon. The other side of the person should interpret really what is the intense communication in that particular letter. The same thing we have with respect to the GST. Today's session, we are going to focus on a couple of changes which are brought in on 31st December 2018. I would say not all, major changes which are relevant for us to understand, we would be touching upon to have a clarity. In between, I will be taking upon a few examples to have a understanding why this particular clarification, why this particular notification has come, what could have been the impact of this change also we will try to understand. To start it, there is one circular which was issued by the department, it's called circular number 76. Supply of old used vehicle, seized confiscated goods, waste and scrap by government departments. Generally under GST, if you see anything we talk about government, service provider should pay GST, or service recipient should pay GST. Usually it is like untouched sector. Government, the moment you say government is one, they are regulators of law, they should not be getting into the clutches of law. As a regulator, I cannot expect myself to get registered in the GST and pay GST. This is a general notion we have with respect to government authorities. But this is one circular which has gone one step ahead and said you are not different from the regular registered person, rather you also fall in line with the regular person. Now if you see this particular circular, they say supply of old used vehicle, seized confiscated goods, waste and scrap by government departments. Now let's take an example. Say there is a vehicle which is moving from Tumkur to Andhra for the purpose of some supply of goods. In the process of movement from Tumkur to Andhra, there are present 3 checkposts. One of the checkposts, the officer has stopped the vehicle to check the basic formalities called e-way bill and other documents relevant for carrying the vehicle. The concerned officer notices that there is some deficiency in the document which was used. Like example, e-way bill. Now we know that every movement of goods where there is a value of goods more than 50,000, e-way bill is something which is compulsory. Assuming this is a case where movement of goods is caused from Tumkur to Andhra, where the invoice has got a value which is not correlating with the e-way bill. Invoice says 10 lakhs, e-way bill says 1 lakh. This officer says, look, you are carrying an e-way bill which is a defective. Technically, you are issuing a tax invoice. Tax invoice says 10 lakhs, e-way bill says 1 lakh. Can the officer accept that? I'll argue, say this is a human error. Instead of punching 10 lakh, I couldn't see that 1 0 is missing. I've entered as 1 lakh instead of 10 lakhs. Does the argument holds good? Officer may get convinced, may not get convinced. If it is a mere procedural lapse where there is no intention to evade payment of tax, officer may accept on the grounds of materiality considering the arithmetical errors which are happening. So here, if this is a case of genuine case where instead of punching 1 lakh, I have punched as 10,000. Punching 10 lakhs, I have punched as 1 lakh. So there is no intention, there is no deceit, there is a tax invoice duly covered. My place of supply, my customer name, my GST number, my customer GST number, everything is quoted. But for 1 0 missing in my e-way bill. There is one recent circular which says if there are any clerical errors, kindly that clerical error be controlled. Don't look at it as a serious lacuna. Another case where goods were moving from Kerala to Uttarakhand. The distance between Kerala to Uttarakhand was supposed to be entered as 2,600 kilometers. By mistake, this concerned person has updated that as 260 kilometers. 2,600, 260, 1 0 is missing. There was a consignment of this particular vehicle and they have issued a notice saying that, look, your e-way bill, what you have prepared, was not technically right as per the law. Where this gentleman approached the court filing a writ petition saying that, look, there is no intention to evade any payment of tax and this is a human error. So High Courts also have come down seriously and said, look, when there are clerical errors where there is no apparent mistake available on the record, let that not be penalized. That can be cut down. This is what the Kerala High Court has confirmed. So extension of that example, assuming there is a case where a vehicle, a bus, say passenger bus is moving from one village to another village. Generally, if you see these rural buses which come, which is not other than KSRTC, private buses, they have the luggage which is loaded onto the bus, which comes from shuttles from one village to another village. In process of shuttling, say it passes through Tumkur district. One of the check post officer stops the vehicle and asks, what is it, the goods you are carrying on? He says, sir, this is the luggage of the passengers who are sitting in the bus. Okay, open the luggage, what is there on the bus? He opens and he notices that some goods are there, the electronic equipments are there, but 50 lakhs which were not having any e-way bill. So he says, look, there is a consignment value of 50 lakh. Where is the e-way bill for that? He says, no sir, I don't know, one of the passengers is carrying on that. He makes an inquiry that there is a customer or is a passenger who is carrying these particular goods. None of the passengers admit that this is my goods. So there comes the intention to evade payment of tax or establishing an evidence that movement of goods are happening without authority of a law. Neither a tax invoice is there nor a e-way bill is there. In this scenario, what will be the officer doing? He has to seize the vehicle. So he will seize the vehicle and he will take it to his head office called Kormangla. He says, I will issue a notice on the bus driver. Look, this particular bus is carrying electronic equipment worth 50 lakhs, where you are not given a sufficient explanation to prove that you are the owner of this particular consignment. In that case, the bus driver says, sir, even I don't know. See, I am just driving the bus. My conductor is there who is getting the people admitted into the bus. One of the passengers said, this is my luggage, I asked him to store on the top of the bus, he did that. In spite of that, the officer is not happy, he says, look, along with the vehicle, I have to confiscate this particular goods. He gives a notice under section 129, confiscation of vehicle, where there is no due explanation by the driver concerned. He will give enough time, say 7 days is given, none of the person come forward claiming that these are the goods which are meant for me. Now this comes a case where supply of old used vehicle, seized and confiscated goods. There are electronic equipments worth 50 lakhs. What does the government do? They have to recover the tax on that. If none of the person is coming forward, they have to put it for auction. No other way apart from that. In the course of doing so, when the commercial tax department, erstwhile commercial tax department, now the GST officer. The state GST officer put it for auction. They say the value of these goods are worth 50 lakhs. Like as you know in the auction, whatever is the best value, you will go for the best value. Say one of the person comes forward for the auction and purchases those electronic goods for 10 lakhs. Who should pay tax on that? When there is an auction conducted, is the goods put it in auction, the ownership of those goods lies with the person who has carried those goods or lies with the government department? Who is the owner of those goods? Can we say the government department, the commercial tax department is the owner of those goods? Can we say so? If I say commercial tax department is the owner, can that be admitted? Are they into the business of buying and selling goods? No. They just make good of the tax which has been escaped, or there is a revenue which has been concealed. They are trying to make good of that particular tax concern. Assuming 50 lakhs on that, 18% is the rate of tax. I would have charged, like the dealer whoever is concerned, 9 lakhs is the tax which you should have paid. Anyway, when I am putting into auction, instead of getting 9 lakhs, I am getting 10 lakhs. My revenue is protected. So, meager selling of goods in an auction, can I say it is a supply? So, to cut down this argument, government has issued a notification called 36 of 2017, read with 37 of 2017, where reverse charge mechanism was brought in. Government say, look, in a scenario where government is going to sell these old used vehicles or seize confiscated goods or waste and scrap, in that particular scenario, instead of government or the concerned commercial tax department paying GST on that, whoever is the buyer of those goods should have paid GST on those particular goods. Where your reverse charge mechanism called 36 of 2017 has been carved out. Things are good. Like they said, reverse charge mechanism is that whoever is the buyer happens to be a registered person, he would be paying GST on that. What if a scenario in an auction, none of the registered person comes forward to buy, rather an individual who is not registered goes forward to buy that particular item. In this case, I was talking about electronic goods. So there is a television which is having a market value of 30,000. As an individual, I will go and quote it for, put my auction bidding price for 20,000. So instead of the registered person coming forward, the individual who is an end consumer comes forward to buy those goods. So in that scenario, will you force the individual to get registered for the purpose of payment of reverse charge? Is it a right mechanism? No. So that is one mechanism which they have clarified through this circular, saying that first and foremost, is it a supply? They say yes. Supply of these goods by a state government, central government or union territory or a local authority is a taxable supply. So this is one fact which we have to admit. Just because it has been put in an auction, you cannot say it is not a supply. When we look into this term called supply, section 7 of CGST Act, read with your definition called business. Many courts have been arguing whether the government offices, whether the government agencies are into the business of buying and selling. Can we say they are into the business? Can you say they are making a supply where they ought to get registered under GST? Unfortunately, if you see the definition called business, even once in a while you do a particular commercial transaction that is deemed to be a supply or that is deemed to be a business. Just because once in a occasion I put for an auction, you cannot say I am not into the business. The periodicity of doing a particular activity is something which is irrelevant under GST. Even once in a while you buy and sell something or you make a supply of taxable goods or services, it is deemed to be a supply under GST. Where this circular says, first and foremost, let us admit that yes, whenever there is a supply of old vehicles or seized goods, it is deemed to be a supply. What else? This is notified for reverse charge mechanism from 30th October 2017, where a registered person should pay tax under reverse charge. So they have clarified, if at all, if the buyer is not a registered person, then the respective state government, central government or union territory have to get registered and pay GST on that particular supply. This is what they have clarified. First time I would say, government has come forward and say, went against the particular mechanism of reverse charge mechanism, say, look, because your recipient is not registered, I cannot force to get the recipient registered for the purpose of this particular transaction. Rather, the mechanism or the judiciary who is concerned with this particular supply, they should have paid GST on that particular supply. So this circular 76 clarifies that in case if the auction is there or if there is a supply where the recipient happens to be an unregistered person, you don't have a choice, rather you get registered and discharge GST. Then again the next question came, should I need to wait for that threshold limit of 20 lakhs, interstate supply section 24, compulsory registration, etc. They say definitely as good as the ordinary citizen holds good, your section 22 read with section 24 gets applied where you have to get registered in case if you are selling to an unregistered person. So this is first clarification which was brought in. Continuation of that. Same circular, they have touched upon section 73. Very important provision. Determination of tax not paid or short paid, erroneously refunded or ITC wrongly levied. Generally, whenever we see this department assessment, they issue a show cause notice. Unless there is an authority, a show cause notice cannot be issued. Take an example. I am a dealer, I have been filing my returns on a regular basis. I have got a call from my range office. Baba, you are filing your returns, but I see the tax what you have been paying is not even to up to 5% of the output tax what you have been paying. Assuming you are monthly having a supply value of 5 crore or 5 crore, whatever output tax is there, instead of paying that output tax through cash ledger, you have been paying through credit ledger. In any given point of time, every month you have input tax much higher than output tax. The officer has got a little concern. Why is this person has not been utilized his cash ledger, rather every month the payment is happening through credit ledger? Doubt can arise? Because 5 crores is not a small amount. Every month my output tax is being through set off with my input tax. Is that possible? I never have a mechanism where I don't pay through cash ledger. Is that mechanism possible? Exports, other than exports? Assuming I am a dealer, wholesale dealer, I have 1% margin. If you see most of this wholesale business, they will not have thick margin. They have very lean margin, hardly 1% or 2%. Assuming I am a wholesale dealer, I have always 2 months buffer stock. I always carry a 2 months buffer stock. Is it not possible to have my purchases higher than my sale? Input tax higher than my output tax?
Not every month.
I have a buffer stock of 2 months every month.
But that has been there from before, right?
That's all. I have that. Whatever taxes I'm paying on my purchase is much higher than what my sale is happening. If you look at your cash flow, always your sale is higher than sale value is higher than purchase value to the extent of 1%. But if you see your purchases, you're buying more than what you can sell, considering the buffer stock requirement.
If
That
the
could-
buffer stock is increasing month on month, it can happen. If it is buffer stock is the same, it will not happen.
Now, that 1% margin till it gets exhausted, like what we say, 2 months buffer stock. Assuming this 2 months buffer stock, whatever taxes are paid, until that is exhausted by way of the 1% margin what you have. On the 1% margin, what is the differential tax you have to pay? At some point of time, the thin margin is sufficient to eat away the input tax accumulation on the buffer stock. It may take 1 year, it may take 2 years. It will happen. Over a period of time, that cycle is going to hit. This officer is little concerned. He says, Baba, I want to look at your purchase and sale transaction. He calls on your mobile number and says, I need your purchase register, sale register. Is that okay to give? No. Why should not I give? Immediately will ask, on what basis you are asking the documents? Is that responsibility casted on me as per the law to provide that particular thing? No. Then he comes forward and says, look, I have a suspicion that you are not being paying tax, rather some sort of bill trading or some adjustment of your purchase and sale is happening. I want to inspect, I want to investigate whether there is any revenue escaping mechanism has been adopted by you. In this scenario, This section 73, section 74, these are the two sections which have been carved out where officer concerned has a right to issue a notice. Generally, my tax recovery mechanism will happen only when there is a notice issued. Without issuance of a notice, your recovery mechanism does not get commenced. So when you look at your taxing provision, authority given under section 73, authority given under section 74. 73 talks about a case where there is no intention to evade payment of tax. There is no deceit, there is no malified practices, there is no misstatement of facts concerned. In that scenario, notice under section 73 gets issued. When there is established evidence that you have an intention to evade payment of tax, a notice under section 74 travels to you. Now this section 73 is a classic example where whenever there is a department audit or whenever there is an audit conducted by any person, I know that this is a list of taxes I have to pay, but some of the item I have forgotten to pay my tax. If I get a health check process of my books of accounts, I ought to pay 10 lakhs, but I have paid only 8 lakhs. This I have understood or I have come across by mechanism of some audit mechanism. The differential amount of 2 lakhs, if I have paid with interest, then I will write to the concerned range office saying that, look, for a particular period, there is a shortfall in payment of tax. That shortfall in payment of tax I have paid along with interest. Once I communicate to the range office, they have no right to issue show cause notice on me for penal provision or recoverance of that particular shortfall. So this particular section 73 says that, look, if you have satisfied those conditions that there is no deceit, there is no intention, malified intention, etc., the mechanism of issuance of show cause notice comes into picture. If you read this entire section 73, there's an entry at 11, 73, 11, which says, though the assessee has paid the taxes, even before issuance of notice or after issuance of notice, if at all there is a shortfall in payment of tax or the tax has not been paid for a period of 30 days from the due date to be paid, then they say a penal action should be invoked. I repeat, I have to pay tax, some reason, working capital arrangement, I have not paid taxes continuously for a period of 2 months from the date of due date of making payment. In that scenario, 7311 can be invoked for the purpose of issuance of a penalty, saying that you ought to pay but you are not paid. Because you are not paid within the given stipulated period, 7311 comes into picture. They are clarifying this particular thing by way of filing of returns. If you recollect the recent order, there are people who have been continuously defaulting, making payment of taxes or filing of returns. What if I have registered under GST, July till December I have filed my returns, January till March I couldn't file my returns because of some pecuniary reason. I have filed all the returns from January 18 till March 18 in the month of April 2018. Whatever interest I have to pay, I have paid my interest also. In that scenario, where you have filed your returns belatedly, whether the penal action can be imposed under section 73. Because 7311 is an overriding factor which says continuous period of 30 days if you have defaulted, then a penal recovery mechanism can be invoked. They have clarified in this particular circular saying that, look, when there is a penal mechanism of 7311, this cannot be invoked for the purpose of delaying filing of returns. If there is a person who has self-assessed this tax and he has filed his return, while filing his return, whatever interest due has also been paid, then don't invoke this 7311, a penal provision for the purpose of slapping penalty. What if 7311 is not applicable? They went ahead and said, look, there is one general penal provision called section 125 that can be invoked, where under 125 a limit of 25,000 has been prescribed. So I will not go with the 7311, rather I will go with under section 125, provided the department feels that there is a necessity to issue a show cause notice for the purpose of recovery of penalty. So this is one welcome clarification which was hanging over, where all the people, though they are ought to file a return, there is a delay in filing return, whether penal action can be invoked. They have clarified that 7311 cannot be invoked, but end of the clarification, they have referred to this section by 125, which is unwarranted. Invariably, any delay in filing of return, the officer concerned, because circular gives a clarity, look, I will not go with 73, rather you may opt for 125. Straight away they will go for 125. This is one clarification they have given.
What is the remedy?
Remedy, we have to file.
No, you have already filed the returns.
That's all.
But you have to pay the penalty.
We have 125 has been drafted that way. You don't find any other provision, specific provision.
Penalty clause which has come into this one, but for that they can invoke for anything, not only for filing this return or anything. They can go with this.
Very much.
Yeah.
Very much. Very much.
Do
Even
you have any provision to go for appeal or something like that? For
we have to. In the course of this justification, the courts have to come down to say that look, because of procedural lapses, you cannot invoke penal provisions because tax has been paid. So moto, self-assessed tax, before even issuance of a notice, when the assessee has paid, where is the question of penalty? Just because you have drafted a provision, it cannot be mitigated or it cannot be litigated or linked to this particular provision. There should be mitigating provisions where in course of time we have to expect to get it. Now, this is another clarification which is actually not required, but they have gone ahead and clarified. There is one transitional provision, miscellaneous provisions, transitional provision called section 142, which talks about transitional phase mechanism. If at all, you have issued a debit note or you have issued a credit note. They are talking about transitional provision. We are falling back to July 2017. If at all there is a transaction which has happened prior to 2017, a transaction which has happened prior to 2017, subsequent to moving into GST, there is an upward in the price or there is a downward in the price because of your contractual obligation. Take an example. 30th June 2017, I supply goods to an OEM customer. I get into a contract saying that subject to price revision over a period of 3 months or 6 months, there could be an upward price revision or there could be a downward price revision. As a trade practice, periodical basis, I have to revise my prices considering the market situation prevailing. My price, though it has been fixed, because of some certain factors, every periodical 6 months I have to revise my price. So 30th June I have supplied goods, where on 31st December, because of my negotiation factor, there is a jump in the price or there is a reduction in the price. Then my section 142 comes into picture. Where they say, if at all there is a price revision because of a contractual obligation, this contract was existing on the day when the supply is happened. Then this particular provision says, within a period of 30 days, you can issue a credit note or you can issue a debit note. Issuance of a credit note for reduction in price, issuance of a debit note for increase in my sale price. Debit note is as good as supplementary invoice under GST law. So this section 142 explains that because you have a pre-existed contractual obligation, you can issue a credit note or you can issue a debit note within a period of 30 days from the date of revision. When I have supplied the goods, assuming my excise duty was 12%, my VAT was 5.5%. I repeat, on the day when I have supplied the goods, my excise duty was 12%, my VAT was 5.5%. Under GST, I don't have neither of these two rates. Neither 12% is there, nor 5% is there. When there is a price revision, say 30 rupees per unit has been escalated to 32 rupees per unit on December 2017. They say this price which is executed on 30th June 17 should have been revised from that particular date where there is a per unit increase of 2 rupees. When I have an increase of 2 rupees, should I charge excise 12% or VAT 5.5 or should I charge the applicable GST? This particular clarification says because this issuance of a debit note or credit note under section 142 is as per section 34 of GST Act. Don't go with your old law, go with your GST law. Whatever is the rate applicable for those goods, the same rate gets applied for the purpose of this debit note or credit note. So with respect to any price revision, with respect to the contractual obligations entered prior to GST era, that particular price revision can be done as per GST law under existing rates. This is what this circular has clarified.
Which invoice reference you have to give for this?
I have to give the reference. Sorry.
Invoice reference?
Which invoice reference? Now if I issue a debit note or if I issue a credit note, I have to refer to my previous invoice which was issued prior to my appointed date, whatever invoice I have issued.
Uploading?
Sorry sir?
Uploading?
Uploading?
How do you upload if I give the previous invoice? That will not
GST. Now this is one technical issue what Rayas was asking, where You have GST one uploaded from July 2017. None of my invoices are there prior to July 2017 in my GST era. When you go for this amendment, there is something called pre-GST checkbox. I'll click on that pre-GST checkbox and I'll give reference to that particular invoice number. The moment I say pre-GST, that gets there is a check mechanism with respect to July 2017 onwards for correlating with invoices. Because this is an invoice prior to my GST law, this checkbox is going to validate or remove the check mechanism of current GST era. So this is one technical issue with respect to linking of invoices prior to GST, post GST. Now this is one circular. I will give a disclaimer. This is not my thought process. This is purely a departmental thought process. In the wisdom of the department, they have issued this particular circular. They say that the GST is applicable on tax collected at source under the provisions of Income Tax Act. Looks very funny, looks very vague to ask this question. And the way they have answered also is very, very funny and they have clarified also. The question here raised, as a part of my business, there are TCS provisions under income tax. Where there is a TCS recovery mechanism under income tax, whether or not GST is applicable on that particular TCS element. Take an example. I am a car showroom dealer. Every car which is sold, which is having value say more than 10 lakhs, I have to recover TCS called 1%. I sell Toyota car for 15 lakhs. On that amount of 15 lakhs plus GST, whatever is applicable, I calculate 1% called TCS. As a showroom dealer, this amount of TCS is not retained by me, rather I deposit back with the government, income tax department. So this particular circular is questioning when there is a TCS recovered under income tax law, whether a GST has to be charged on that particular TCS. They have clarified that look, there is one section called section 15 which talks about valuation. When you look into section 15 subsection 2, it says any taxes levied, due, collected, etc. under any other law existing at the time in force shall also be considered forming part of your supply, where GST has to be collected, GST has to be levied on that particular TCS also. If you read 15.2, it says if charged separately by the supplier, because TCS is a levy under income tax. 15.2 says any other taxes levied under any other law, it has to be included as per 15.2. They say include your TCS for the purpose of charging GST of 18%. If I have to give effect to this circular, Excel throws out me an error called circular reference. In Excel, we have something called circular reference. I do a multiplication on a sum total. Again, for the purpose of GST, I go to the sum total for the purpose of charging 18%. TCS is linked with the sum total. My GST is also linked with sum total. Where neither Microsoft has an answer to get away with this particular computation. But department has come forward and said, on TCS also you have to charge GST of 18%. So this is one clarification has taken a night from most of these car dealers for a week's time. The moment this particular notification circular has come, 31st December it has been issued, New Year party, they get to know that TCS is applicable. I have 300 crores turnover, already I have recovered 3 crores TCS, on 3 crores 18% is what GST I have to pay. From where do I pay that 18% GST? This is a kind of nightmare which has caused because of this particular circular. Couple of people have gone for filing a writ petition. Kerala has given interim stay. It has not said it is absurd, but Kerala High Court has given interim stay saying that this mechanism of levy of GST on TCS has to be examined and then decided. So right now, as of now, if you see, this circular says retrospectively effect from July 2017, wherever there is a TCS recovery, GST of 18% has to be applied. This is what holds good. Sir, any inputs on this?
But actually on the full value he is already calculating the GST and he is taking. Again on the TCS means it is a double taxation.
First of all, I cannot calculate. First of all, double taxation is admitted. How do I calculate? If they give an example, it holds good. So what we have to do, probably we have to go for advanced ruling. Sir, this is what the circular says. Please give me a mechanism of calculation, explain how to pay tax. Because for payment of tax also I can go for advanced ruling. I have to file advanced ruling to get a clarity on this.
What is the normal time they take for advance ruling?
They say technically 30 days, but they decide in due course of time, which takes 60 sweet period of 60 days to 90 days also.
There was a clarification.
Sir, I'll just.
There was a CVDT clarification on non-applicability of TDS on service tax, which they extended to GST also. But there was no clear-cut clarification on TCS thing. But can't it be extended because the circular reference thing is a curse?
I that is what we have to fight across and make them understood that this is not going to happen. Because see, the person who is drafting the law might not have read the income tax provision, how the calculation computation is done. If he has applied the thought process of computation of TCS, then this circular would not have been in picture. Yes, sir.
See, there should be a levy. So is TCS a levy?
Yes, sir.
And second is, it should be charged by the supplier.
Yes, sir.
Now is he charging?
15.2 verbatim says charged. Now, unfortunately, there is no definition for charge. Whatever you have shown in invoice, can you say it is charged? Because you are having a right to recover. On the invoice, you are levying some charges. When you charge some charges on the invoice, would it be fitting into the definition of charge? Is what the person who has drafted the circular would have interpreted that. Whatever comes into an invoice would be under the purview of charge under section 15, by virtue of which the circular has come into picture. Otherwise, it would not have come in. Because, see, as a TCS, what am I doing? I am acting as an agent of income tax department. I am not a person who is charging. I am not levying anything. As an income tax mechanism, they have drafted certain provisions. I am just acting as a dealer who is an agent of income tax department to recover that money and pay back to the income tax department. Neither income tax department pays me anything nor the customer pays me anything. This is only a right casted on me I have fulfilled. But for that there is no action done or there is no supply which happened from my end. So that way this particular mechanism, it is not a levy, it is not a charge. But the literal interpretation, verbatim interpretation is because I have used the term charge, whatever is fitting into your invoice is deemed to be a charge is what the circular has an interpretation for levy TCS. We'll go further.
As of now, what is suggested? Like, see, for example, even forest department collects TCS on bamboo sales and everything. So in those cases, what do we do?
Compliance with the law, go with the TS circular. Non-compliance with the law, file a writ petition. Two seniors are sitting there who can help us. So we have to fight on this particular thing. There is no way payment of taxes can be adhered to. Like I was saying, 300 crores turnover where TCS has been already deducted and paid. I didn't even have any recovery mechanism. If I have to pay 18%, interest of 18% I have to pay. Is it a small aspect? I definitely say no. So many people have taken a stand, let's go for filing a writ petition, somehow get rid of this particular circular. And the kind of cost involved in getting clarified with this particular thing, imagine. Your professional fee, documentation, the time the courts have to shell out for giving it up. Like ultimately, the circular is going to set aside. But at whose cost? At what cost? What's a matter of time spent on this particular thing? This is all what we have to think of.
Then it can go for pure agent because that is not his part of consideration. So he collects from me, deposits there. So that can he claim under pure agent and get rid of this?
Okay. Now another, see, this is a benefit of senior sitting here. I don't get into the argument of paying the TCS. Rather, I am acting as a pure agent under section 15, read with the rule, where I am not collecting, I am not charging anything. But the circular says the TCS what has been levied, what has been charged, you have to charge GST. Though I am acting as a pure agent, since the circular says whatever TCS has been recovered, on that you have to charge GST. I don't have any other way to get out of this. Again, they are there to file in High Court to say why it should not be paid. Next, move on to section circular number 77. denial of composition option by tax authorities and effective date of thereof. This is one circular which is helpful for the department per se with respect to composition. Just to give a glimpse why we are having this circular. These days, if you see, not many people are into composition because of the way business is happening. Like business is so robust, you cannot say I will put a particular orbit and I try to play only within this orbit. When there is a requirement of the customer, you have to jump out of the orbit and do further also. So composition scheme is something, though it was brought in from erstwhile VAT law, it is actually not much of use considering the way business is happening. So composition scheme is one scheme which is there under section 10 of CGST Act, where a simple mechanism they have brought in. You don't pay, don't collect taxes from your customer, don't take input tax credit, file a quarterly return, a simple return, whatever is your turnover, pay simple tax at the rate of 1% or 5%, whatever is prevailing. Now, ifs and buts have come. Sir, you said about composition, I jump in and get into the benefit of composition. What if one of the condition under composition has not been met, where I jump out of my composition? So, once I get jumped out of composition, is it the day from the day my registration certificate has been issued, I will be out of composition, or the day or event on which the composition has to be taken off? Like example, as a composition dealer, I cannot make the interstate supply. I am into a business where my market demands or my customer demands, I have to make some interstate supply. Over a period of July 17 till December 17, I have been under composition. January 18, February 18, I am under composition. March 18, one contract has come. I am registered in Bomsandra industrial area, close to Karnataka and Tamil Nadu border. One of my customer who is there in Karnataka also happened his business in Hosur. He is demanding, I don't want any other person to supply the canteen, you only have to come and supply. Because of the force from customer, I made an interstate supply unknowingly that this is not permissible under composition. If I do a particular activity where my conditions laid down in granting my composition is a failure, the question was asked, the benefit of composition will be lifted from the day your registration has been issued or the day when this bypassing the condition has been met. This circular says that don't worry. Whenever you are opting out of composition, the day you have opted out, filing a particular form, that day will be considered as a day where you have opted out of composition. In case if the department officer is going to lift the particular composition benefit because one of the conditions you have not completed, the day when he has identified that particular event, that should be the day when you will be out of your composition. So this is a clarification which is very welcome, where though I am under composition, because of virtue of one particular transaction, if I jump out of my composition scheme, how I can get away and from when I get into the regular registration. This also clarifies what will happen to the input tax credit with respect to the inputs available in stock. So this is one welcome clarificatory note. This circular refund related, I would say government is really working. I don't know what is your experience with respect to refund mechanism, but under GST law, if I say refunds are happening much faster and easiest way compared to the erstwhile service tax or VAT regime or central excise, whatever you say. They have brought some more clarification saying that with respect to your input tax credit refund, earlier you file your refund application, along with your refund application you have to file all your input tax credit avail documents. They say nothing to worry, because there is a portal called GST R2A where there is an auto-populated window. All your suppliers are going to file their GST R1. Once it has been uploaded, you just take a printout of that 2A document, submit along with your refund application. What if I have 100 invoices on which I have taken input tax credit, 80 suppliers have uploaded their documents which is populated on 2A. 20 documents are there which are not populated. So he says, to the extent of 80, provide your 2A document. To the extent of 20, give the bills of those 20 cases alone for the purpose of processing your refund application. No need to give entire list of your input tax credit documents. With respect to inverted duty structure, they have said, look, when you are claiming input tax credit on inverted duty structure, there are questions asked. Sir, I am into a business where my output tax is charged at the rate of 5%. When you look into my purchases, I have purchases which are chargeable at the rate of 5%, also taxed at 12%, also taxed at 28%. As a registered person, I am going for refund under section 54 for inverted structure. So when I file my refund application, offices are denying the refund. Why? Look, they say inverted structure, you are paying 5% on your output. When you look into your purchases, there are purchases 5, 12, 28. To the extent of 12 and 28, or to the extent of 5, I will not give you the refund because it is not under inverted structure. You are paying 5%, you are also paying 5%, so don't claim a refund for to the extent of 5%. To the extent of 12%, 18% or 28, there is a right for you to claim because that is under inverted duty structure. They are trying to bring the equation compared with your output tax. This particular circular says, look, I am giving a refund of input tax credit. When I say input tax credit, it doesn't deviate, it doesn't question 5%, 12%, 18%, etc. Whatever is a right you can claim as per section 16, that is input tax which is coming into your credit ledger. To that extent, the moment the application is filed, you sanction the refund. Don't question with respect to 5 compared with 5, 12 compared with 5 or 18 compared with 18. This kind of input-output ratios or rates don't compare. Whatever is the input tax credit available, kindly sanction your refund for that extent. Then they have also said online mechanism. The moment you upload your documents, the moment you file your RPA, declaration, statement, everything, refund should be processed online within a period of 60 days. This is very, very welcome move from the circular which has been brought in. Why? If at all if there is a dilly-dally mechanism which is adopted by the concerned officer, we can always call back to this circular and say, look, this particular mechanism says that from the day my ARN application is submitted, once the ARN is submitted, within a period of 60 days you have to process my refund. In fact, this circular says, whatever refund application has been received, within the 45 days you have to process your refund application so that we can get into the disbursement of the refund amount. If not, the interest starts clicking from the day 60 days gets over. They are bound to pay interest from the 61st day of your ARN generation. So this circular says within 45 days you process your refund application. In process of so, if there is any clarification, inquiry, etc., issue a kind of notice or some clarification required from the assessee. The assessee will resubmit the particular refund application quoting the original ARN number so that you can reprocess the particular application. So this is one mechanism which has triggered the refunds much more faster. Compensation cess in related to zero rated supply. This particular zero rated with respect to compensation cess. Earlier they were saying if you are into zero rated supply, you are not paying any taxes. To the extent of input tax credit, what you have paid on the compensation cess. Example, you are buying coal for the purpose of generation of power and which you are into process of say aluminium. Whatever aluminium you manufacture, you export out of India. When you export out of India, you don't pay any tax, rather you make a call that as a zero rated supply. There are purchases on which I have paid compensation cess where I have exported that without payment of tax. To that extent they are saying you cannot claim the input tax credit. But this circular says compensation cess paid on your purchases is also eligible as an input tax credit. In fact, this circular goes ahead and clarifies one more aspect. Most of the refund applications, if you see, the moment you file your refund application, they are questioning whether you are eligible for input tax credit on this particular item or not. One of the classic example is quoted in the same circular. Say you buy coal for the purpose of generation of power. Using that power, I get into my manufacturing activity. My final product is taxable under GST. They are arguing, the department officers are questioning, look, you are buying coal for the purpose of generation of electricity. Electricity is not taxable under GST, there is an exemption. Electricity happens to be intermediate product, though you are using it for manufacturing activity, the input is used for a production of intermediate product which is exempted under GST. To that extent of your inputs, your refund application is deemed to be rejected. This is one interpretation the department officers are taking. Where the circular says, look, the equation of correlating 1 to 1 does not exist under GST law. As long as your business definition gets satisfied, as long as your section 16 talks about availment of input tax credit for the purpose of making further supply. When that particular conditions are satisfied, don't get into this equation of comparing input vis-a-vis your what is happening in between the process. Don't do the in-between inspection, rather check your output. If the input used is intermediately where there is an exemption production is there, though it is used further for the purpose of production process like captive consumption. Don't deny the input tax credit on flimsy grounds stating that this is an intermediate product which is exempted under GST law. This is one circular which is very helpful for all those questions being raised with respect to refund mechanism. In fact, when I file my refund application, this is just a processing of refund. I have paid this much tax, I have paid this much output tax, whatever is eligible should be processed. Questioning, that is whether you are eligible, assessment mechanism, whether this is an input tax credit for business, whether this is eligible or not, this is some mechanism which is unwanted exercise being carried out by the department offices. All those particular questions which are arising at the process of your processing of refund application have been carefully addressed in this particular circular. So this particular circular is a very welcome move. Wherever we have refund applications, we can fall back to this circular to get most of our issues addressed.
Just a clarification.
Yes, sir.
So electricity is exempt from GST, so, but I can get a refund on the GST paid on coal. Is that the...
The officer is questioning, I am into the business of manufacturing aluminium. I am into the business of manufacturing aluminium. Aluminium is taxable under GST. I buy coal for power generation, electricity generation. That electricity I cannot distribute to BESCOM or some other people. Rather, I use it in-house for my production process. Officer has questioned, the coal which you are using is not used for aluminium. It is used for generation of electricity, power. That is something which is exempted goods under GST. Because that is exempted to the extent of your purchase, which is going to intermediate process, which is exempted, you cannot take the input tax credit. The department clarified, don't get into this kind of nitty-gritty equating one to one. Check whether it is used for business. If it is used for business, it is an input tax credit. As long as you are making a supply which is taxable under GST, don't get into this nitty-gritty is what they have clarified.
So as far as electrical companies are concerned, they can't get any input tax credit.
Yes, they cannot. As long as your output tax is exempted, then you can't get it. We can't get the input tax benefit.
Case of refund on inverted tax structure. So suppose that the December meeting where the rates were cut down. So prior to that there was the GST ITC. Now since the rates are cut down, can we go and apply for refund?
Okay. Before answering that, I'll just add a little more to touch upon that only. Rates have cut down, like a very good question example which a friend has brought in. Say all along I have been paying 18% rate of tax. Because of a council decision, my product from 18% has come down to 12%. When my product has come down to 12%, what will happen to my input tax credit? What will happen to my pricing? First and foremost, check with respect to your pricing aspect. Whenever there is a dip in price, check your pricing. Why? There is something called anti-profiteering mechanism. Whenever you are paying 18%, when the rate of that product has come down from 18% to say 12% or 5%, whether you are affected with your anti-profiting provision mechanism is what we have to examine. Why? If at all you are selling MRP products, by chance your MRP has not been changed because of cut down in the rate, then your anti-profiting mechanism is one thing which is attached to that particular mechanism. Second, continuation of his own example. I have been paying 18% all along, or say 28% all along as my tax on my purchases. But if you see my output tax is charged at the rate of 12%. If you see, my output tax is 12%, input tax 28%. To the extent of purchase, if I see, there is an imbalance. Accumulation of credit is happening to that extent. Whether it is tantamounting to inverted duty structure, answer is yes. It is tantamounting to inverted duty structure. For that, you have to go with again an equation. If though it is an inverted duty structure, we have to get into the equation of calculation to what extent I can claim on the basis of turnover computation. With respect to this refund, further they are saying with respect to input tax credit, if it has been credited to electronic credit ledger, correlation of invoice or correlation of document is nothing to do with. Like classic example, under VAT law, if we try to see the refund or assessment mechanism, the bill which was issued in the month of March 2018, if I have accounted in the month of April 2018, look, the supply which happened in the March 18, you have accounted in April 18, the month which you have received you should have shown in returns, but you are not shown. Because of this correlation of dates with the returns, even refunds are getting stuck. They say don't question the dates because is it eligible or not? That is what your exercise or your job is to do. If it is matching with the requirements of input tax credit, and if it is within the purview of the law, let him claim the input tax credit. And what is a credit which is hitting to electronic credit ledger? That is a credit which he is claiming as an input tax credit. So kindly process the refund without correlation to the dates or period concerned. This is another clarification which they have given in the same circular. Extension of electricity example, what we are talking, they are also questioning, look, as a part of business, when I take input tax credit on stores and space, packing material, printing and stationery, they are saying, no, this is not input for the purpose of claiming a refund. You set aside all this input tax credit, then the balance you rework out, that is something which you are going to give a refund for. Again, this clarifies, look, you are not going to get into the ambit of verifying whether it is correlated, not correlated, etc. Put into the question of whether it is into supply of business. Whether you are into supply of business using this particular inputs, kindly process the refund application. Like example, stores and space. If I buy stores and space, though it is not capital goods which I am into putting into P&L, why should the input tax credit be provided? If you are using the stores and space as capital goods, let there be an input tax benefit is what the argument department people are taking. They saying, Baba, it is a derogatory thing of the assessee concerned, whether they hit to P&L or they hit to balance sheet. Depending on the usage of the item, they may treat into the books of accounts. With respect to the nature of item, like stationery, printing a material or packing material, whatever it is, if it is essential for the purpose of business, they are claiming input tax credit as per your section 16. As long as your condition of input tax credit has been met, don't question with respect to denial of refund on the grounds of eligibility of input tax credit. Again, this is another welcome move which is very helpful for most of the clarifications raised by the department concerned. Refund of IDC on input services and capital goods restricted under 54.3. Like when we are talking about input, they say eligibility of refund inverted structure. They say inverted duty structure, I can claim the refund on inputs into services capital goods. Answer is, I can take the refund only with respect to inputs, not input services or capital goods. If you read your section 54, they say any tax paid on your inputs, if it is subjected to inverted duty structure, that can be subjected to refund mechanism. So input service and capital goods cannot be subjected to my section 54.3 for inverted duty structure. Export of service. This is another circular. Looks good. Like when we watch a movie, we get thrilled, we get excited watching a movie. But there is a certain essence or certain things in a particular movie which cannot happen in a practical scenario. That is again one another core example with respect to this particular circular we are going to see with respect to export of services. First we'll understand what the circular says, then we'll try to get into the practical ambiguity of this particular implementation. Say there is a supplier called Mr. A who is registered in the Karnataka and gets a contract for 1 lakh USD from a customer called Mr. B in Germany. So this particular circular says, say there is a supplier in the Karnataka, this supplier gets a contract from a customer abroad. In this case, let's take example called B. B gets into contract with A. A is in Karnataka. B says, for the particular supply you are going to make, I am going to pay you 1 lakh USD. Export of service rules, if you say, supplier should be in India, recipient should be outside India. Place of supply, India or outside India? Outside India. Remuneration, consideration, convertible foreign currency. All conditions are met. My supplier is in India, recipient is outside India, money is in convertible foreign currency for a particular amount, and the service, assuming place of service, place of supply is outside India. Since all the conditions are met, I call this as an export transaction. Example is clear? Now, this person, Mr. A, happens to be supplier of service. Mr. B remits 75% to Mr. C at the instruction of Mr. A. A third party is coming to picture. B, who is in Germany, is going to pay to Mr. C, say an amount of 75% of the consideration. I think there is a typographical error. It should have been read as 25%. Let's take the same example. A has got a contract from B. As per the contract obligation, B has to pay to C 25% of the supply value. Out of 1 lakh USD, 25,000 USD, B is going to pay to Mr. C. Who is B? B is a recipient of service. Why he is paying to C? Mr. C is a service provider in Germany, performs his portion of service and receives payment from Mr. B. What is happening? A has got a contract from B. Part of the contractual obligation, A has to travel or something has to be performed by A. A says, there is one person called C who is available in Germany. As per my instruction, C will come to your location, he will do the performance. Once he completed his activity, whatever 1 lakh you have to pay me, you pay me 75%, 25% you pay directly to Mr. C. So the money is not coming to India, money is getting rotated outside India. A is getting 75,000 USD, C is getting 25,000 USD. B has to pay 1 lakh USD. Example is clear? Everyone? So the department has clarified this particular transaction and say, with respect to this limb, A has got a service from Mr. C to the extent of 25,000 USD. In the books of A, that should be considered as an import of service. So A has to book the expense of 25,000 USD, convert into INR, pay a reverse charge mechanism tax on that particular 25,000 USD. If you look into the bank statement of Mr. A, is going to get only 75,000 USD. But if you read your condition as per the import of service, export of service, I should have received the contract value in convertible foreign currency. My contract order value is 1 lakh, but my bank statement I am going to get only for 75,000. I am not going to get for entire 1 lakh. Department clarified, if A has paid reverse charge mechanism on that 25,000, though he has not received that 25,000, I will consider entire 1 lakh as export of service for the purpose of your GST law. This is what they have clarified. Clear?
It is deemed supply.
It is deemed supply for the purpose of import or export.
Export.
Import come export or export.
Here one clarification. Suppose the invoice is in rupees, but consideration comes in foreign exchange. Can I still take the benefit of the
Consideration should come in convertible foreign exchange.
consideration comes in convertible foreign exchange? There's no problem.
That's it.
There's no issue as far as this is concerned.
Place of supply outside India.
There's some confusion among our peer group, where the advice is being given to the client: go back, change all your bills, raise it in dollars, and so I said no, but I just wanted to confirm. So as long as the invoice is in rupees, as long as the consideration comes in foreign exchange, whether the invoice is raised in whichever
export of service has been met. Yes. So here, now, do we see any complexity to have this circular in picture? Really, do we see any complexity to have this particular circular in picture? Like, as a part of business, I instruct my foreign vendor to perform a particular event where he does the performance. Instead of me paying to him, he gets a payment from abroad. All your 15 CA, CB certificates are also affected.
What about FARCs?
What about the FARC? Now, banker, I have raised invoice for 1 lakh USD. Do I get the amount for 1 lakh USD? I get only for 75,000 USD. Whether RBI will keep quiet on that? Is that a acceptance channel under banking law? Netting off. Instead of I get a 1 lakh remuneration, I get 10,000, balance 90,000 is set off over there for the particular activity done. Isn't the economy going to get paralyzed because of this netting off mechanism? So this is one thing which is actually, I would say, maybe happening out of the way by way of some referral commission, etc. This is one mechanism where you have to take a prior law of RBI, maybe a special approval, general approval, I am not sure, but you have to take an approval for case to case for executing this particular transaction. This is what the example says. Now practically, getting into RBI, getting into the banker's books for the purpose of approvals, what they say, Baba, I do it for 75,000. You raise the purchase order on me for 75,000. Look, there is one supplier who is there in Germany. He will do that execution on my behalf. His consideration is going to take. We are all unrelated party. At arm's length transaction, I am doing this particular transaction. So I will get it for 75,000. You pay me 75,000. That fellow is going to bill for 25,000, you pay him directly 25,000. This is what generally happens in the normal course of business. This mechanism is something which generally doesn't happen. No, government file, look, there is a tax mechanism, reverse charge. The moment you say reverse charge, government is going to get the tax. After you file a refund application, that's a different story. Upfront you are going to get the tax revenue. So the government is trying to get the revenue of that particular netting of mechanism which was happening outside the law, outside the books of accounts. When you have this referral commission or some other particular activity done out of the way where someone else is performing on your behalf, that particular mechanism, that particular limb of the transaction, government is trying to catch hold and say, look, that is also taxable under GST. The recipient in India should bring that particular amount as an expense in the books of India and pay GST on reverse charge. Not only that, the moment you say that is an expense, your TDS mechanism comes into picture. Correct? Again, once I account that as an expense, if I don't pay within a period of 6 months, etc., I have expense incurred, I have an expense in my books of accounts which is not paid. How do you net off? These are all accounting implications which are revolving with respect to this particular example. Though department has secured it in its interest, I see many other practical issues coming in line with respect to your income tax complaint, with respect to your RBI complaints, with respect to your books of accounts maintenance.
This A has performed service in Germany to on behalf of
A is a person in Karnataka.
No, C has performed
In Germany.
to B on behalf of me.
Yes.
Will it not fall under 33 so that that's not received in India?
Supplier of service is outside India. Recipient of service is in India.
No, 13.3. See,
Play.
13.2 means fine. 13.3 means in that case it is not basically not received in India.
Okay, you said place of supply is outside India.
Yes.
Okay. It is not import of service at all.
Because if you exactly follow 13.3, physically performance, it is kind of consultancy.
Okay. This is an extension where couple of examples could be there where if the performance is outside India, where place of supply is outside India, can you call that as an import of service? This is one technical NAG which is also attached to this particular circle. Not all situations you may have import of service. Again, case to case, when the department is going to check into this kind of transaction, we have to have a clarity with respect to place of supply. If the place of supply is outside India, as he rightly said, if the place of supply is outside India, performance supply is also outside India, whether it tantamount to import of service, answer is negative way. That is also one shelter which we can think of. Right, is it? Admitted. So with respect to this export of services, they say Mr. A can claim zero rated benefit to the extent of 100%. Supplier in India has to pay reverse charge mechanism to the extent of that 25,000 which he has to which B is paying to Mr. C. Even if the full consideration is not received by A, that is 1 lakh USD, though not received by in terms of netting off, they say it is deemed to be a supply, zero rated supply for the purpose of your section 16. They say provided RBI general approval or specific sanction is required for this particular netting off mechanism. So carefully, wherever this kind of bilateral transaction, tri-party transaction is there between two nations, we have to examine case to case whether money is going to come India, netting of mechanism permitted or not.
But ultimately again, under RCM we can take back the credit.
He can take back the input tax credit.
So entire exercise is a...
It's only paying and
You pay and take the input tax credit. Government is getting its money. And you claim the benefit of 1 lakh USD.
So, job with, growth with jobs. Huh?
Growth.
There's a domestic supply, then in the meantime you are not going to get the full amount.
Stuck with the working capital.
Huh?
Stuck with the working capital. This is one circular on education sector, supply of food by education institutions. Like left and right, they have been playing around with this area. Some reason a circular comes again to smash that, another circular comes. Finally, they have put an end to this particular thing. If you see under GST, there are two notifications. One is 11 of 2017, another is 12 of 2017. 11 talks about rate applicable. 12 talks about exemptions provided. This particular supply of canteen or supply of food by way of canteen has been brought under GST under 11. When they are bringing that 5% category, they say school or college. They have just referred to the term called school or college in the explanation. The moment they have referred the term school or college, they have brought it to a question. Under 12, you are giving a benefit of education institution. Anything done by education institution to the student, members, staff is exempted. But somewhere in the rate notification, you are saying school and college are also taxable at the rate of 5% with respect to canteen supply. They say, don't worry. Though there is a taxing provision under 11, the notification gives a rate of tax. There is an exemption notification under 12, which overrides this 11 with respect of your chapter heading or service accounting code. This is one circular, though clarifies how exemption has been provided overriding the taxing notification, is one circular which we can fall back with respect to couple of clarifications in future or arguments in future. This in principle says, since there is a supply exempted under 12 of 2017, education institution to the students or faculty members, that exemption overrides your taxing provision. So this circular says no levy of GST if it is canteen services provided by the education institution. Very important, removal of difficulty. Now this is one order. This is one order actually taken away many of the professional revenues on 31st December. GST 9, GST 9C. From 31st, when was it due? 31st December 2018. They have extended till 31st March. Further extended till 30th June. As usual, when you say 30th September is the last date, morning on 30th September we'll start finding where is the digital signature. We'll find where is the client, whether he is ready to pay the tax or not to file the return. That's how generally even other returns work. As well as that annual returns. We are eagerly waiting, like if you see September, October, November, lot of marathon was there to understand what is GST 9, what is GST 9C. By the time we could finally understand what is 9 and 9C, like they have extended the due date. Happily, they have extended. Now, good news is that GST 9, which is there in the public domain, again is going to get revised for a couple of technical glitches. Why? We will understand little a while. Now, we will come back to this particular order, which is a root cause of this extension. Root cause of the extension. Order number 2 of 2018, due date for availing input tax credit for the year 2017-18. What it says, they have extended the time limit for the purpose of taking input tax credit for the financial year 2017-18. They say, when you look at your input tax mechanism, there is one section 16 which talks about input tax. Whatever supply happened with respect to the financial year 17-18, you take the input tax in the year 17-18 subject to a period of 6 months from the end of the financial year. That is on or before September 2018. If you recollect, just go back in time machine to September return filing. Many people have a big nightmare. Why? Input tax for 17-18, I have to see what is there in my books of accounts. I have to compare my input tax as per books of accounts with 2A portal. I have 30 lakhs in my books of accounts. I have 35 lakhs in the 2A portal. 5 lakhs I have not taken input tax credit. Should I take or not? If I take, what will be the issue? If I have to take, whether the documents are available or not. Assuming I file my return without taking that 5 lakhs, can I adjust that 5 lakhs subsequently when I get the bill from the supplier? Lot of practical issues were there, where there was a press release issued in the month of October 2018. They say, don't delay your September return for the purpose of availment of ITC for the period 17-18. Like many people are also questioning, look, for the period 17-18, in my books of accounts, credit was there for 30 lakhs. When I look into my 2A, credit was there only for 28 lakhs. To the extent of 2 lakhs, there is an excess credit in my books of accounts. As an auditor, should I reverse, should I advise my client to reverse the input tax credit to the extent of 2 lakhs? These are all practical issues which are hovering around during the period September and October. Thankfully, a press release has come. Don't worry, I am not equating your input tax with the 2A portal or any other mechanism. It is only a statutory mechanism where press release has come, which is not clarified completely. But this removal of order which has come on 31st December has clearly explained. Whatever input tax credit for 17-18, some reason you are not taken in 17-18, though the due date is your September 2018, for the purpose of implementation of GST being the first year, are given the extension till 31st March 2019. That means attention. If I have not taken any input tax with respect to my 17-18 financial year, all those bills I can take the input tax credit till 31st March 2019. That means when I have my portal where supplier has filed his return, some reason bills are not come to the accounts department, misplaced, etc., whatever it is, you get those missing credits, get it accounted in your books of accounts till 31st March 2019. This is the order passed on 31st December. Inevitably, this order, like we have direct tax, indirect tax, there are certain links in the department. Someone who's technically working, someone who's working on the conceptual part. Conceptual part, they are given extension till 31st March 2019. But on the technical part, this annual return, 31st December 2000 was extended to 31st March. Again got extended to 30th June. Some miscommunication where your annual returns, the formats and the other conditions should also have been read with your this order. When I file my annual return, I should not be restricted for input tax credit pertaining to the financial year 17-18 till September 2018. As per this order, I have a time limit till 31st March 2019. If you see the annual return, the old format till September 2018 is still continuing, which again needs an amendment. We will see the screenshots also. So they say, why we have given this extension, there are missing invoices. Because this is the first year of implementation, some invoices are missed out. So we are giving a leeway to take the input tax credit till 31st March. The registered person could not rectify the error or omission. This is one very good move they have done. If you see the latest GST 1, if you log into your GST 1 amendment option table 9, the moment you log into this amendment 2017-18, 18-19, both the years are getting populated. Earlier, the table 9 was showing only 2018-19 because amendment for the year 17-18 has not been invoked because of this section 16 dealt with your section 37. After this order was released, the government also has opened the window for correction of those invoices pertaining to 17-18. If at all there was an error, if at all if there was an omission pertaining to the supply of 2017-18, they have given a time extension till 31st March 2019. So by virtue of this order, what we have to understand is, look into your 2A, look into your books of accounts. What is the credit available in the books? Credit not available on the portal. Advise the supplier, Baba, you have time till 31st March, please go ahead and file your GST 1 and 3B if you have not filed. Alternatively, I have credit in the 2A portal, I am not availed credit in my books of accounts. Examine whether the credit which is reflecting the portal is a genuine credit which I can take or credit which is missed out. If the credit is genuine, try to get the bills for that particular supply, avail the input tax credit for that particular missing case. So 31st March 2019 is the deadline they have given as per this order. Thankfully, your 9 and 9C got extended as per this particular order. And if they have given the closure on 31st March, generally people do wait till last minute for some amount of information. My annual returns would not have been successful there. So that is the reason why 31st March got extended to 30th June, giving enough space for the assessees or registered people to do the reconciliation between your books and 2A, get the consents of the supplier and recipient for filing mechanism. So this is one welcome move from the department.
What is the assessee's responsibility if there are unmatched invoices uploaded to the party wrongly and it not belongs to me?
Right now, don't take.
How I have to remove it?
You cannot remove. Keep quiet. In your GST 9 there is a window where I will say this is a credit lapse. I will not take the credit for that particular amount.
We have to show as eligible and...
We will not show as eligible. We will say amount available as per 2A, amount available as per 3B. Difference of that we will explain either ineligible or not available.
So that one, but we can't make any...
rejection etc. That mechanism is not there. So just keep quiet on that particular thing.
On the 3B,
And whether we have to implement that this is not, credits are not available to the department.
As extra concern, complaints purpose, you make an intimation. That is also not required. Not required. Additional complaints, you can make an intimation. Sir.
3 days before this, there is a facility available 3B to modification also. Supplier can modify, and if there is a wrongly our number is mentioned, that they can change.
GST 1. GST 1, yes sir. Recently, like Sir was saying, this GST window has been opened for 17-18 with respect to the error or omission which was done by the supplier. Any credits missed out, etc. All that you can educate to your supplier. Baba 17-18 is also open. Deadline is 31st March. Put your acceleration on rectification mode. Get it rectified by 31st March. Now, couple of issues like what we were having when this order has been passed. My supplier has defaulted in filing GST one. Can I avail the input tax credit on the basis of documents available? When I say I have bills received, but my supplier has not filed his returns, can I take the input tax credit? Can I say take yes? Can I say yes? Right now, if you say it is yes, because your 41, 42 matching mechanism, 42, 43 matching mechanism is not there. When you read your section 16, subsection 4 or 16, subsection 2, it says input tax credit is available to you on a provisional basis. If you read your section 16 with 41, it says any credit you push into your credit ledger is on a provisional basis. Why is it a provisional basis? It is subject to scrutiny at a later stage, subject to ratification, subject to verification. If your input tax does not match with your output tax, 16 has a control saying that tax should have been paid to the government, either by the supplier or recipient. If the tax is not paid, the officer has a right to question for reversal. So in this case, what I will do, credit can be availed on provisional basis, subject to payment of tax. I will instruct my supplier, Baba, you have not filed your return, kindly file your return to the extent of not filed, or if you have missed to show that particular credit, you can show through amendment window and pay the differential tax to that extent. My supplier has filed GST 1, but the credit is not visible in 2A. Books of accounts, credit is available, but on the portal, the credit is not available. What I will do, credit can be availed on provisional basis. I will instruct my supplier, Baba, there is an option to rectify your error or omission, do the rectification. ITC is available in 2A, however, no bills are received from supplier. Can the recipient take the input tax credit? ITC can be availed only on receipt of goods or services by the recipient, subject to payment and availability of documents as per Rule 36. Unless I have a document, I cannot take the credit. Many questions have raised, sir, I have taken the input tax credit on the basis of a document. My supplier also filed his GST 1, where it is visible in my GST 2A. If I have misplaced the document, what will happen? I have taken, at the time of accounting, I have the bill. Subsequently, I have misplaced the bill. To prove that it is a supply, I can show my bank entry that payment is done. I can show my 2A saying that look, supplier has filed his return. That is also visible. But as of now, the rule says you should have received the goods and services. You should also have the valid document for the purpose of availment of ITC. Somehow I would see there is a dilution required in this particular rule where you still insist for a manual documents. Extension of time limit for your TCS, GST this is order number 3, extension of time limit for 9/98/96 till 30th June. Reason, since this extension of ITC came till 31st March, they have given additional time of 2-3 months for reconciliation for filing of your annual return. This order number 4, they have extended TCS return. TCS was due actually on respective months. They by you issuing this order, they have extended for the period October to December till 31st January 2019. Why they have given extension? They say there are technical reasons why the registration was not given to the person or some other technical issues. We are passing this order for extension. Now, we'll come on to the major aspects which have changed, annual returns modifications. Like this is one of the eye-opener which is required for filing your annual returns. If you see annual returns part 2, it says details of outward and inward supplies declared during the financial year. This term declared during the financial year was changed as made during the financial year. The meaning itself got changed. Whatever, earlier we had an understanding called GIGO, garbage in, garbage out. Whatever you have dumped into GST 3B or GST 1 should be blindly compiled for the purpose of GST 9. But they have clarified, no, it is not during, it was not declared, rather it should have been made as declared during the year. So whatever transactions were there for that particular period called July to March should have been shown in your annual return. They have amended the definitions or headings appropriately. Table 4, details of advances inward outward supply. Earlier it was read as on which tax is payable as declared in the returns file. That was changed as made during the financial year. There is a change. Earlier, whatever was shown, that alone I was restricting to. Now, I am going ahead and say, whatever turnover was there for the year 17-18, if it is disclosed subsequently, that also I have to bring into my GSTR 9. So my clarity has extended, my work also got extended. Technically, a couple of questions have come. So when you have been appointed as a GST auditor, you will be appointed for the year 17-18. Can you travel beyond 17-18 to 18-19 for the purpose of making inquiry? Why? I have made some discovery that there is a canteen recovery on which GST is not paid. Client said, yes, I have paid my GST on canteen recovery in the month of September 2018. Should I need to check the return for September 2018 to ensure the tax which was to be paid in 17-18 was actually paid in 18-19? To again verify September 18 return, you should see what was the sale register, what is the purchase register, what is the output tax for that particular month, whether this additional tax pertaining to 17-18 was shown in that or not. These are the technical issues which comes across with respect to filing of your annual return. So bumper bonanza, take your appointment for 2 years to file your 9. Details of outward supplies on which tax is not payable as declared in the returns filed during the financial year has to be read as made during the financial year. Most of the headings, if you see, the table names got changed. ITC declared in returns during the year, ITC for the financial year. This is a major change which was brought in, I would say, annual return. Earlier they are saying ITC as declared in the returns. July to March, what is shown in your 3B, that alone I was talking. Now, if you see, details of ITC for the financial year, that means 17-18, what all credits I am taking till March 2018, that is also called ITC for the year. For the financial year 17-18. So I have to extend my scope to see what is the credit missed out, what is the credit I am taking. While when I do my 2A versus books reconciliation, this is also one extended limit which I have to comment upon. So invariably your appointment is taken care. ITC declared in the returns, ITC availed during the financial year. Now this is a table I was hinting why again GST 9 is going to get amended. If you see table number 8, other ITC declared, you are doing a reconciliation. ITC as per 2A compared with ITC as per your 3B, 6B and 6H above. ITC on outward supply other than imports etc. whatever is there received during 17-18 but availed during April to September 2018. This is one table where I am explaining earlier pertaining to financial year 17-18 by virtue of section 16 the extended period of 6 months I am taking the input tax credit. Once this removal of difficulty order number 2 has come, that September period got extended till March 2019. So while filling this information, I cannot restrict my scope till September. I have to drag it till March 2019. So invariably again, this rules which were amended on December, again due for amendment subsequently. So another 1 month we will wait for the amendment to come. Details of tax paid as declared in the returns. Details of IDs reversed during the financial year. Now, this is another part where financial year or up to the date of filing of annual return. This is one table where additional output tax, additional your input tax, reduction in your output tax. This is one table which talks about. They say adjustments till the period April to September or filing of annual return. This April to September, because there is an amendment in section 37, amendment in section 16 gets extended till 31st March. Again this table also needs to have an amendment. This is the beauty. Now new annual return, if you see, couple of changes are brought in by way of a clarification instruction. First thing, mandatory to file GST on 3B for financial year 17-18 before filing GST 9. If I don't file my GST 1 or 3B for any of the month, I cannot file my GST 9. A pre-check mechanism they have brought in. This is the additional beauty. Additional liability of 17-18 may be declared in this return. This is one of the indicative move where if at all as an auditor you make a suggestion for the additional tax payout. That additional tax payout you have to pay using a cash ledger. In GST 9, if there is a discovery of additional tax liability, that tax liability should have been paid through DRC 03 challan. That DRC 03 challan, that is your additional tax, will be disclosed in my annual return. So this instruction says, Baba, if you have additional liability, please show it in your GST 9. Read the flip side of this.
Can I net off the input and pay the additional liability?
Sir?
Can I net off the inputs and pay the additional liability?
I cannot do so because my input tax credit which is credited to my credit ledger can be utilized only for the purpose of payment of self-assessed tax. I repeat, my input tax which has been credited to credit ledger, I can use that only for the purpose of self-assessed tax. this is a mechanism where someone is advising you to pay additional tax. So I cannot use my credit ledger for payment of additional tax. I cannot pay through credit ledger. What is the option you have? Pay through cash ledger, where the DIC 03 mechanism is there.
I'm not saying that. I'm saying I have say now additional input I found out say 10 rupees.
Okay.
And additional output says 12 rupees.
Okay.
Can I pay now only 2 rupees here? Can I recommend him to pay only 2 rupees?
Okay. His question, now again, little debatable. His point is, as an auditor, I discover input tax of 10 rupees. I also discover output tax of 12 rupees. Netting of 2 rupees, can I pay through this annual return? Answer would be, this 10 rupees what you have to avail, you should have availed in your GST at 3B. Annual return is not a mechanism. This is what the point I was trying to touch upon. Annual return is not a mechanism for availment of input tax credit. If you read in your input tax provisions, only a credit ledger can be hit while filing your return, monthly return. Other than monthly return, my input tax credit cannot hit into my credit ledger. With respect to output tax, any output tax I pay through my regular return, that is the output tax way I can set off using my input tax credit. Output tax which was flowing by way of your assessment mechanism or any other mode, that is a tax which should be paid through cash ledger. That is why they clarified annual return, any additional tax liabilities there, DRC 03 have to use. So with respect to input tax, push it through input tax mechanism, filing 3B. Output tax, again through your output tax, then what sir says, you can pay 2 rupees provided you show through your returns, not bringing into annual return. If you are trying to bring into annual return, 10 rupees gone case you cannot take because annual return is not a mechanism for ITC. But with respect to output tax, yes, I am open to collect tax from you, but not to give the benefit of input tax.
But
so this,
because the additional liability which is being declared in GST 9 is only the self-assessed only, right? Because if there is an additional liability suggested by auditor through 9C, that will be the one which is not self-assessed. But if I am showing something in GST 9, it is still self-assessed because GST 9 is the one which I am filing, which the auditor is not filing.
okay.
So still I can pay through ITC. You see, the availment of additional ITC through
Got
9
it,
may not be possible.
got it. Self-assessed tax can be shown through your returns. That is your periodical returns. Self-assessed tax, provisional basis, can be used only for the purpose of payment of self-assessed tax, which is shown to your monthly returns. So if you read 16 till 42, 43, this clarity comes in way. What is that I have assessed? I have to show it to my returns for the purpose of payment of tax. I am not showing it to returns. Rather, I am bringing over here. The only mechanism for you to pay that additional tax is your cash ledger through DRC 03. I cannot use my credit ledger for netting off my self-assessed tax which is discovered through annual return. It cannot be called as a self-assessed tax again. If it is a self-assessed tax, you should have shown in your returns. Because you have self-assessed, you have not shown in returns, isn't it their intention to evade payment of tax?
Whether the verb
If you say self-assessed, why you have not brought it your periodical returns? All this is the argument which comes in where your recovery mechanism of section 74 comes into picture.
Is it clearing law or some sort of
Interpretation. It is interpretation of all the provisions read together.
Then what would be the difference of changing the previous form as declared and paid? Wouldn't this be a...
See, earlier we are restricting the scope to the returns of that particular year. That has been clarified with respect to the supply of that particular financial year. From returns, we have changed to the financial year. Supply for the year, during the year. Earlier, supplier disclosed in that particular returns. Earlier notion, we are restricting to the returns filed during that particular period. Now, we are changing for the financial year, that particular tax period, called July 17 to March 18. Any tax due for that particular period, if it all due, whether you have paid, you have disclosed in GST, we are trying to bring that clarity. Earlier, we are restricting. We are saying, if at all it was not shown, as an auditor, do you need to bring? Yes, you have to bring as additional recovery mechanism where 9C comes into picture for payment of tax. Any kind of disparity on that.
Because ITC point has been changed, right? ITC declared and...
It has been changed. It has been. Next, mandatory file GST 3B for financial year 17 before filing GST 9. Additional liability may be declared in this return. ITC not claimed during the year cannot be claimed through this return. They have made it clear. Output tax, you can bring into GST 9. Input tax, you cannot claim through GST 9. Many suggestions were there, like back to 40, when any person has missed out the input tax credit, whether you can make a suggestion through back to 40. That analogy does not hold good. You cannot make any suggestion, recommendation through 9 or 9C. Rather, you have to take the input tax credit in your monthly return.
Actually, when we go for the audit in the month of June,
Yes, sir.
that due date for the ITC is already over. So we can't do it.
That's why in March you have to.
Itself we have to do the audit.
Yes, yes. You have to force your assessee to get the work done in March. Next is your security services under reverse charge mechanism. Service tax, we were happy. RCM is so much of complication is there where we are getting professional revenues. Someone says 25%, someone says 75%, someone says 50%, 50%. Lot of complexity which is not required, which was there in a service tax. When we move to GST, again we felt things are very straight, 100% either supplier will pay or recipient will pay. That was the kind of hope we came into GST. They have kept their promise. They have brought only few list of services under reverse charge mechanism. This partial levy under supplier, partial payment of tax under recipient, that mechanism was not there under GST. Thankfully, even now it is not there. Next limb which got added, the family of reverse charge mechanism, is your security services. Unwantedly complicated, why they have got in again. Category, supply of security personnel, supplier of security service, supplier of security personnel. Again, there comes your litigation. When I have a security contract, is it a supply of manpower? Is it a services done by the security contractor? If I appoint a person for 24 hours, say 3 shifts are there, 8 into 3, so 3 shifts, 3 people are there. What they do? They just stand on the gate, they'll say who is coming in, who is going out. Some person will insist to fill the forms. You give additional assignment. This fellow has to maintain some documents. When a vehicle is coming, he'll check and inspect whether there is a purchase order, whether the goods are permitted on the authority of the purchase order available or not. Whether the goods are going back, he'll do the basic inspection. How many crates are there? What is the boxes available? Some sort of additional activity done. When we change the scope of the security manpower supply to additional activity called security contracts or security services, will that change slightly for implementation? Is again an argument which is coming in further for implementation of this reverse charge. When they brought in this reverse charge, they say, what is under reverse charge? Supply of security personnel is something which is under reverse charge. By and large, we are deeming or taking it for granted all security contracts is going to come under reverse charge mechanism. When is a reverse charge applicable? If the supplier is any person other than a body corporate. Again, who is a body corporate? Why do I check whether he is a body corporate or not? So every case, if a security bill is given, I have to see whether he is a company or other than a company. Body corporate not defined under GST law. We have to fall back to Companies Act to have a clarification. So if the supplier is other than a body corporate, then I have to see a triggering point for reverse charge mechanism. Recipient, who should be the recipient? Recipient is a registered person other than composition registered in a taxable territory. So if my supplier is a person other than a body corporate, that means in simple terms other than a company. My supplier is other than a company and the recipient happens to be a registered person, RCM gets triggered. This is what they say. While bringing this particular thing, they say this category is not applicable to composition taxable person, registered person. When you see 9.3, your GTA case, RCM is applicable. As a composition dealer, I have to pay tax under reverse charge mechanism. I have legal advocate service, again this is under reverse charge mechanism. Composition dealer has to pay tax under reverse charge mechanism. While on security specifically they say it is not applicable to composition, isn't it bringing a complexity in its implementation? So this is one thing they say, if your supplier is other than a body corporate and recipient happens to be a registered person other than the composition registration, then reverse charge gets triggered. This is what they have brought in.
So what about the security services available by educational institution which is exempt under RCM?
Unregistered. Security, if he is now other than a body corporate, registered person is a recipient person, then RCM is applicable. We have to go to the exemption notification. Because there is an exemption notification, I need not pay tax on that. From taxing perspective, RCM is applicable. But when I have to pay tax, look, there is an exemption notification by virtue of which I would not be paying for that.
For But in all other cases, the security services provider
Has to pay. Has to. If simple terms, if the security fellow is a body corporate, then forward charge. If it's not a body corporate, then based on the recipient, either he'll pay forward charge or recipient or reverse charge. This is another complexity.
But the security services, whether he has to insist that RCM or he can pay on his own also.
Now, this is another beauty. When the law says there is a reverse charge mechanism applicable, take example. I am a registered firm where I am into security services. My client is a registered company. When he lays a bill on my client, he says, you don't pay under forward charge because RCM is there. As a company, I will pay tax to the government. Security person says, no, I want to pay tax under forward charge to the government. Security fellow charges GST on that. Company, I'll say, instead of getting into the nitty-gritty of accounting for reverse charge, payment of tax, accounting, let him charge GST and let him collect tax from me. This is what the example says. Over a period of years, when the assessment happens, the assessing officer says, this particular security is under reverse charge. Why you have not paid reverse charge mechanism is a question they are going to ask. I will say, look, my service provider who is under GST registration is raising a tax invoice and is paying tax to the government. So that is the reason I am not paying tax under reverse charge. This is the argument I am going to put forth to the department. So department officer will stand to your argument provided we prove the tax has been paid to the government. Either one person should pay, either the recipient or supplier should pay. Tax cannot be levied twice on the same transaction. Just because you have brought in notification where reverse charge has been brought in, you insist the service provider and also recipient. That cannot be imposed. But responsibility is on you to prove that service provider has already paid the taxes to the government. That is now, how do you ensure? Do you get a CA certificate? Do you when you get a security bill, you get the PFESA challan. Like that, you get the GST payment challan. How do you prove on the GST challan your bill also is included? So again, you do audit of that particular fellow's returns. So this is additional activity which comes in.
So only CA certificate is there?
CA certificate. Increase in employment. Professional avenues. Next is your e-way bill related modifications.
Sir, one small clarification. In the case of security services, where the tax is paid under reverse charge mechanism, what happens to the TCS now they have been brought in now?
Security?
Yeah.
I'm not here. Is the security also under TCS?
Yes.
Okay. So whether GST should be charged in, as per the circular, it is applicable. As per the circular, it is
No,
applicable.
that is also like
This e-way bill, again in the rules, they have brought an amendment saying that if a regular taxpayer has defaulted in filing returns for 2 months, if a compensation fellow has defaulted in 2 consecutive periods, look at the beauty, they say compensation 2 consecutive periods, regular person 2 months. If there is a default in filing returns, they say no e-way bill. I am going to block your e-way bill portal for generation of e-way bill. Can they do so? They have the right. They take the plug, the server is down.
Second case, Campo should tell us, sir.
In case of 2 consecutive periods, means 2 quarterly returns are not filed, then they will say your e-way bill cannot be generated. So with this, we come to end of the major clarifications which were brought in on 31st December 2018. Any other doubts are there with respect to discussions we had? I'm open to take up the questions.
ITC we discussed the
ITC.
extension till March 2019. What about the RCM services? Because there may be some RCM services, maybe some import of services which the assessee failed to recognize and pay tax. So, but still the clarification, the removal of difficulty also is about the supplier.
I have received the service, reckon the service, pay the tax, claim the input tax credit for them.
Till
March 2019, yes, hold. Sir, GSTR 1, there is an amendment option. GSTR 3, no reverse option. Through amendment, the table 9, through amendment, we can do the corrections for that.
Under income tax. On that GST is levied.
Okay. Thanks for your patience listening and thanks for giving this opportunity. Thank you.
Thank you, Mr. Praveen Kumar for updating us on GST amendments and enriching our knowledge. And once again, on behalf of Family Branch of SARCA, we thank you for sparing your valuable time and sharing your knowledge. I request our past chairman, Praveen Kumar, to come forward and present a memento to our speaker as a token of appreciation and gratitude. At this note, we would like to now conclude the session. Happy Republic Day once again and happy weekend. But don't forget to cast your right to vote tomorrow. So please come to our branch to cast your right to vote